One of the most important conditions for entering into a position with most strategies is to first determine the trend. As you can see here with this example, we can see that the price action made multiple moves to the upside. However, we can also see that the price made multiple moves to the downside. If we take a closer look at the price action, we can also see that during these moves there were also candlesticks going in the opposite direction. A solution to this are the Heiken Ashi candlesticks, which smooth the regular candlesticks and reduce the noise in the market. As you can see, once we added the Heiken Ashi candlesticks to the chart, the price action is smoothed out and the market noise is significantly reduced, which causes us to easily see whether the trend is bullish or bearish. Even though the Heiken Ashi candlesticks work great at clearly showing us the trend, there is one massive drawback that prevents us from fully utilizing them. The drawback we are talking about is that Heiken Ashi candlesticks do not show us the real high, low, and close of the candlestick. This means that support and resistance zones are not accurately reflected, backtests won't be accurate, and delayed signals can be given. Along with this, Heiken Ashi candlesticks can provide us with inaccurate readings of the market if the market is less volatile or choppy, meaning that the smoothing effect can cause us to miss important price movements. The solution for this problem is the smoothed Heiken Ashi indicator, which plots smoothed Heiken Ashi candlesticks along with the price action. Let's first add the indicator to the chart. To do this, head over to the Indicator Search tab and search for the smoothed Heiken Ashi indicator. Select the indicator made by Jack and add it to the chart. Now let's change the indicator settings. Click on the Indicator Settings tab and navigate to the Style settings. Here we will be changing the opacity of the wicks so that the chart becomes easier to read. That was all that we needed to do. Now let's take a look at how the indicator works. The smoothed Heiken Ashi indicator works a bit differently than the regular Heiken Ashi candlesticks. The main difference is that the smooth Heiken Ashi indicator plots the Heiken Ashi candlesticks as a moving average. If we take a look at the input settings of the indicator, we will see that there are two values that can be changed. These two values represent the first and second smoothing that is applied on the candlesticks. As you can see, if we increase the smoothing values, the indicator will be a lot less choppy but provide less precise signals. Increasing the value of the smoothing is recommended for spotting larger trends or when using the indicator in higher volatility markets. The opposite is true when we lower the values. When we do this, we make the indicator more precise, however the indicator becomes a lot less accurate, meaning that the indicator will frequently switch trends. Using lower values is better for spotting shorter-term trends in lower volatility markets. Because the default lengths are a good middle ground, we will change the lengths back to default. Now let's take a look at how we can read the indicator. But before that, if you are looking to backtest your own strategies, then check out Trader Edge. It's used by thousands of traders to backtest their strategies. If you sign up via the link in the description, you will also receive over $470 worth of bonuses, including a step-by-step backtesting plan, a course on building a profitable mechanical trading strategy, and 4 high-quality pre-made strategies. To get all of these free bonuses, along with a 7-day free trial, sign up via the link in the description. There are a few ways of reading the indicator. The most common way of reading the indicator is by concluding that when the smooth candlesticks are red, we are in a downtrend, and when the smooth candlesticks are green, we are in an uptrend. It's also recommended to wait for 2 candlesticks that go in the opposite direction to appear before determining that the trend has switched. Another powerful way of reading the indicator is by looking at the position of the price action relative to the smoothed Heiken Ashi candlesticks. You will often notice that when the current trend of the market is bearish, the price action will be trading below the smooth candlesticks. When the trend is bullish, the price action will usually be trading above the smooth candlesticks. Knowing this, we can spot reversals before the color of the smooth candlesticks changes. As you can see here, the price crossed above the smooth candlesticks. This means that once the candlesticks turn green, there will be a high probability of the uptrend continuing. Besides trend reversal trading, the indicator can also be used in trend-following strategies. This is because the smooth candlesticks can act as dynamic support and resistance zones. In this example, we can see that during the downtrend the price frequently moved up to the smooth Heiken Ashi candlesticks before rejecting them and continuing in the downward direction. In this case, we see that the market is currently in an uptrend because of the green smooth candlesticks. However, during this uptrend we can see that the price made multiple pullbacks to the smooth Heiken Ashi candlesticks. Once these pullbacks were made, the price continued in the upward direction, showing us how the indicator can be used to spot support and resistance zones. A less common way of reading the indicator that can provide even more accurate signals is by having multiple smooth Heiken Ashi candle indicators on the chart. We currently have two smooth Heiken Ashis added to the chart. One has a value of 8 and the other has a value of 20. As you can see, by having multiple smooth candlesticks on the chart, we can see both the shorter term and the longer term trend. In this case, we can see that both the shorter term and longer term smooth candlesticks are red, indicating that there is a long and short term downtrend playing out, showing us that it's a good idea to enter into a sell position once the price makes a pullback. Here we can see that only the short-term Heiken Ashi candlesticks were green, making it a bad idea to enter into the position since the long-term trend is still bearish. The double smooth Heiken Ashi can also be used to spot long and short-term support and resistance levels. If the price pulls back to a shorter-term smooth Heiken Ashi while the longer-term smooth Heiken Ashi is still bullish, we know that there is a greater chance of the price respecting the support point instead of breaking through it. It's also important to note that trading based on crossovers from the two smooth Heiken Ashi indicators is not advised. This is because when utilizing crossovers with this indicator, it is likely that delayed signals will be provided, meaning that the large move will already have happened when the signal is provided. Now that we know how the indicator works and how we can read the indicator, let's take a look at different entries that can be made with the indicator. We are currently looking at USD JPY on the 1-hour time frame. We can see that both the long and short-term smooth candlesticks are green. Along with this, we can see that the price is trading above both of the indicators. However, if we take a closer look at the price action, we can see that the price is currently making a pullback to the shorter-term HA candles. If we look at the previous price action, we can also see that there was a small consolidation period at this price level. This indicates that the price level could be a support zone. All of these signals show us that this might be a good opportunity to enter into a buy position. Before entering into the position, let's first wait for the price to bounce off the support zone and the HA candles. We can see here that the price action respected both the HA candles and the support zone. Along with this, we can also see that all of the HA candlesticks are still green, so let's enter into the buy position. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a recent swing high, aiming for a risk-to-reward ratio of at least 2. Here we see that there was a small consolidation that took place, so let's place the take profit here. Now let's see how the trade plays out. For this example, we will only be using one smooth Heiken Ashi candle indicator with default settings. We can see here that a downtrend was playing out. The downtrend ended due to a short uptrend. During this uptrend, the price action frequently tried to break through the smooth HA candlesticks. However, if we take a look at the price action now, we see that the price broke through the HA candlesticks, showing us that there is a high likelihood of the previous downtrend continuing. Before entering, let's first wait for the HA candlesticks to turn red to confirm the signal. As you can see, this occurs here, so let's now enter into the position. We will be placing the stop loss at the recent swing high. For the take profit, we will be targeting a recent swing low, aiming for a risk-to-reward ratio of at least 2. If we take a look at the past price action, we can see that a small consolidation period took place here, so let's place the take profit at this point. Now let's see how the trade plays out. As you can see, the smooth Heiken Ashi candlesticks is an extremely powerful indicator that can help us combine Heiken Ashi candlesticks along with the actual price action. If you enjoyed the video, please leave a like and subscribe to the channel so that we can keep making these free videos.